And welcome everyone to another Smart Money Circle episode. I'm Adam Sarhan. With me today is Jake Claver, who's the chairman at Digital Ascension Group with approximately $1 billion in assets under management. Jake, thank you so much for taking the time and welcome to the Smart Money Circle.
Absolutely. Thank you for having me.
So, Jake, I always like to begin. Can you please tell us your story and how you got to where you are today?
Sure. So went to school for finance, never really used it in my career. Learned all the fun stuff, Sharp ratio, Buffett indicator, PE ratios, all the things that you normally expect if you went to school for finance. Had a short internship at Northwestern Mutual, and I hated it. I felt like I was a snake oil salesman selling insurance to my friends and family, and I don't know, it just didn't feel right to me. So I decided to take a different path. Ended up working in industrial sales for about a decade. Worked for Fastenal, helped them scale locations. They moved me around. Got acquired by another business in the same vertical, but different products. Sold business for stuff for them for a while. Doubled their business within a year, and they didn't do good on the equity. They said they were going to do for me. So ended up stepping out and doing some M&A consulting. Worked with a lot of the blue collar business owners to be able to help them scale and exit their business. Had a few exits there. And while I was doing that, COVID happened. And I was saving for a house for my wife and I. A couple hundred grand is what I had set aside. And when the market fell, I watched my dad in 2008 miss out on American Airlines. He pulls me into the office, like 16 years old, and he had pulled his money out of the market. He had about $100,000, and he was like, "I want to put this into American Airlines. I think they're going to bail him out." And I was like, being 16 years old, I'm like, "Yeah, roll it if you feel
Yeah.
like it's a good investment." And we had just moved, and he had stepped away and started doing consulting. And he was like, "I'm conservative. I want to make sure that we have enough money to be able to cover the house payment, and like, I need this money to make sure that we're good. If everything else goes, and I don't have a job and I can't get consulting gigs." And so I was like, "Well, just do $10,000,
Right.
And he ended up not throwing the money at it. And there was three or four times in his life where we had conversation about things, and he just didn't move. Um, and had he done that, he would have retired far sooner, and been able to do that prior to him passing 4 years ago and still continue to work. So for me, when I saw the opportunity, I jumped on it. I took all the money that I had saved, previous 401k from Fastenal, rolled it to a self-directed IRA, dumped it all in the market, and I just did blue chip, Facebook, Amazon, Google, Tesla. Thought, okay, like if the world shut down, this is going to be okay. These will come back eventually, right? They did way better than I thought. They came back immediately and actually got back to the same levels that I was concerned about before. I'd stayed out of the market just because I thought PE ratios were too high, and at some point they were going to come down, and that would be the opportunity. Kind of a Ben Graham, Warren Buffett type investing mindset. And so, as I looked at de-risk, I was watching, Andy Schectman and Peter Schiff and a lot of the Austrian economics, gold bugs type people, Mike Maloney. And I came across a video between Peter Schiff and a Bitcoin guy. I don't even remember who the Bitcoin gentleman was at this point, but that's when it clicked for me what digital assets were. They're the next iteration of the internet and how value is going to move. So I took all the money that I made in stocks, rolled it all into crypto in middle of 2020, got into 13 positions. If your ignorance is a hedge against risk, or sorry, diversification is a hedge against ignorance. So I was ignorant and I knew that. And I'm like, all right, well, I'm just going to kind of sprinkle this across here based on, and I look at crypto the same way I look at traditional equities. I look at partnerships, total addressable market, the problem they're trying to solve, the people that worked on the team, the traction that they have. And to be clear, today it's still completely speculative. 6 years later, we haven't had any of the promise of this technology actually taking effect yet, but I think we're right on the precipice of it. So did really well, rode that up. I don't think I'm smarter than anybody else, just right place, right time, took advantage of the opportunity, took a swing. And at the top of the market in 21, I was in a position that my parents had never been in. I had never been in. Nobody I knew had ever been in. And scared, right? Like made all this money. Now what do I do? The analogy that I give people is kind of like a dog chasing a car, right? Like the dog wants to catch the car, and then you catch the car, but how do you drive it? How do you not run yourself over?
Yeah.
So I was like, okay, I'd read Rich Dad Poor Dad and a lot of the books by Robert Kiyosaki and many others. And I thought, all right, I need to surround myself with the right people. So I start Googling, looking for advisors, CPAs, accountants, estate planners, tax attorneys, wealth managers, people that I could, help me navigate this situation, structure my estate, mitigate taxes, take profits.
Yeah.
And wish I would have sold more. I think everybody through their first cycle goes that way. But I whittled it down, made probably close to 100 phone calls across the US talking to advisors. And I'd spent a lot of time studying the asset class. So I actually understood, you know, the tax law and some things around it to be able to have the conversations. Whittled it down to the 5 people I worked with to structure my estate and make sure that things were on the up and up, mitigate taxes. And that was 21. And then 22, I got on Twitter because I was, not doing the M&A anymore. I'd made a little bit of money, spending some time on the internet. And I started talking on Twitter Spaces about, what I had done, how I'd structured things, how I was mitigating taxes. And people gave me the deer in the headlights look like, what do you mean you can do this for crypto? There's no regulation around it. And a few people were nice enough to make some intros to some family offices. And so, started consulting for them. We formed the wealth management component in 23, started taking assets in late 24, right before the election, and went 0 to 1 billion in about 12 months through
Congratulations.
2025, all in crypto. So that's all we do is we have some traditional assets, for if a client wants to bring those over for, the cohesive portfolio management, but by and large, probably 95% of what we manage is crypto.
Wow. Okay. I love your story, by the way. Congrats on your success. We love success around here. We celebrate it. So let's talk about your business. Please tell us what the business does, competitive advantages, anywhere you want to
Yeah.
go.
Yeah, so we're a multifamily office, specialize in digital assets. So everything that you would think of for private client services from a traditional investment bank or another MFO, but curated to crypto. So tax planning, estate planning, wealth management, concierge service, lifestyle, bill pay, um, all those things. We have the connections to be able to facilitate all of that either in-house or through partnerships that we've curated. And yeah, also very interested in the macro. I speak a lot about that publicly, talk about my thoughts on the market, where things are going. And, we want to just help people navigate this. Their traditional advisor normally throws their hands up and says, there's no regulation around that. I can't even talk about it. And it's not even, many of them do want to help, but they're owners of the corporation tell them no, we can't touch that. If you want to invest in it, it's got to be through an ETF at this point. We don't, deal with direct access or cold wallets or exchanges or helping clients navigate that. And it really does clients a disservice. They don't really have somebody they can talk to. Sometimes they're taking far more risk than they should be. You need an advisor to help walk you through that, right? What's your risk tolerance, your suitability, long-term goals? How does this play a role in your total portfolio? Not just, roll it all on black and hope that you hit. Uh, and that's what a lot of crypto is, unfortunately. There's 50,000 of these cryptos that are out there. I think that there's going to be a huge consolidation down to somewhere less than 100 in the not too distant future, similar to the dot-com boom. Everybody was putting .com after everything, and then you had the real winners kind of showed up in the next 5 to 10 years after that collapse. So I think we're at that point now. I think there is going to be a consolidation, and we're here to help people make sure that they can navigate that.
Wow, I love that. Okay, thank you for that. It also reminds me of the airlines, as there's a lot of airlines back in the
Hmm.
70s days, and then it consolidated when you mentioned
Yeah.
American Airlines. That comes to mind as well. All right, let's talk about risk management. How do you handle risk, and what are some mistakes you see people make with respect to risk management?
Oh man. So there's a lot of different risks in crypto that you really don't even have to think about in traditional finance. Custody and counterparty risk a lot of the time are just kind of foregone conclusions in traditional finance. Whereas in crypto, because there aren't regulations around the parties that are holding these assets, often they're commingled. They're not bankruptcy remote. They're not insured. Many times they're not segregated in your name. We do all of those things inside of an institutional custodian. Our partners Anchorage for that. They were the first OCC charter that was granted in Trump's first term before the Biden administration. And so they have a really robust suite of compliance and banking infrastructure that they use to help facilitate this and make sure that it's done in the right way to mitigate the loss of assets. That's probably the biggest risk in crypto is just how you're holding it and who you're holding it with. And then separate of that, the volatility in this asset class. Most people just buy and hold and hope it goes up.
Yeah.
There's not a whole lot of, thoughtful strategies around options or derivatives or ways to be able to hedge downside risk. We
Mhm.
help our clients navigate those things. We've built products and derivatives and financial models to be able to structure that in a way to help them sort through those issues, and still retain ownership and get the upside in the asset. Other people want to generate cash flow or continue to compound the asset. We built strategies for that as well. Um, but again, with the volatility risk, counterparty risk, custody risk, regulation, there's so many things that are still a high risk threshold for most people. The large majority of family offices that I go speak in front of and talk to, they're still hesitant. They're crypto curious. They see that there's opportunity here, but they want to make sure that they're making an educated allocation if they are going to do that and working with a trusted party in doing so. So, there may be other outside risks that I didn't mention. Never any guarantees when you're investing, but those are the ones that we think about on a daily basis and have worked through to mitigate on our side.
Wonderful. Thank you for that. How about some timeless lessons, Jake, that you've learned along the way that you'd like to share with the audience? Any direction you want to go, by the way, for the rest of my questions, business, relationships, life,
Yeah.
wide open.
Um, well, kind of circle back to my dad. Um, like I said, I watched him multiple times have brilliant ideas or have a visceral response to something where he knew what the outcome was going to be and still be hesitant to take a swing at it. I would encourage people to take the swing. Especially if you have a long time horizon, you're young, you should have a high risk tolerance and be able to, take those swings or educated guesses if you have them. Um, you don't, I'm not going to say you don't get rich working for somebody else. I've seen people do very, very well being in the top six executives at a corporation, stock options and all those things, helping somebody else build their business. Um, but if you have a passion or something that really pulls you when you get up in the morning or something that you want to live for, gives you fulfillment, I think that it does matter that you chase that. And I think people are going to have that opportunity here in the near future. I think we're going to move to a world where, AI and many of these other tools that we're creating right now are going to grow GDP independent of, the human population or exponentially add to our ability to create value in society. And so through that, I think you'll have to work less, be able to make more, and focus on your passions. Um, the other thing that I think, the framework that I use in our business and a lot of the time when I'm thinking through things is leverage.
Yeah.
I don't know if you ever heard of Naval Ravikant?
Yeah.
Okay. So I'm sure
But,
you
but
probably have.
educate the audience, please, because I'm sure many people have not.
So Naval's a prolific founder. He's in Silicon Valley. He's kind of a guru when it comes to helping people scale businesses. And he thinks through things with leverage, right? So there's four types of leverage that he talks about. A couple of people, I think Alex Hormozy or somebody else has coined it as the four C's. But you have code, content, capital, and community. So what do those mean, right? Well, if you're creating this podcast, we shoot it one time. I spend, 30 minutes or 45 minutes with you. You do the same with me. You put this out. Millions of people could watch this podcast.
Correct.
That's the leverage, right? You did it one time and it can be used over and over again. A way that you could use content in your business would be creating an SOP. You define that process, you shoot a video on it, people can see that, they get to learn from it, and you can use that multiple times within your business. You only had to do it one time. Code, people probably understand that when you can vibe code at this point using the different LLMs that are out there. You don't even need to hire, a strong team of coders at this point. Probably for QC still, you probably need a few coders to verify the code, make sure it's executing correctly. But you build that one time. That's why SaaS has been so profitable, right? Each additional incremental user that moves onto a platform adds to the margin base because it was a fixed cost or, there is some variable cost there on continuing to be able to update the platform, but it's very low after you've built it
Yeah.
and gained traction in the market. And then on the internal side, using LLMs and other ways to be able to streamline your business, to be able to reduce costs and create efficiencies. Those are kind of the two, mirrored ways that I think about that one. Capital. people understand that one pretty easy, right? You make investments, it continues to compound, or you can reinvest in your business and resources to be able to compound that capital inside your business. And then lastly is community. So this one's near and dear to my heart. We have a mastermind of about 17,000 people. And the culture that's been built there is just incredible. Everybody wants to help everybody. Like you said, celebrate success. Nobody's dogging anybody. We encourage people to share the cool things that are happening in their life. Because oftentimes, if you share that out on traditional social media, people poo-poo on it. A lot of people are upset with where they are, and they reflect that in their comments to you when you are having something good happen to you. So we celebrate successes in there. Try to build each other up, provide financial education, business resources, access to private deal flow. And that's been instrumental in, what we've been able to accomplish with the corporation at scale. It's a separate, educational business that we run, but there's a lot of overlap between what we do and the services that we provide. Same thing for your employees, right? Labor is probably what people would think of as leverage. I don't expect our employees to be perfect. I'm not perfect. 70% done by somebody else is 100% awesome in my book. So a lot of people have a hard time delegating responsibility or training or spending the time to help somebody else climb the ladder and make sure that they're competent to be able to perform a task. We do that, right? We want to invest in our people. We want to make sure that they have long careers with us and they're able to continue to grow, and there's not a ceiling working with the corporation. I've worked for a lot of really good managers and other managers that were not so great. So I really enjoyed my time, some of it, working for other corporations, large and small. And you really get to see, how people incentivize others. And everybody is a little bit different. Some people need a carrot and some people need a stick. I'm the carrot. If you have a big enough opportunity, I will run and chase and do whatever I need to in order to be able to reach that goal. And I think those are the people that tend to be the most successful. If you need a boot in your butt in order to get going in the morning, you're probably not going to get very far. People don't want to drag you along with them. So have a good
Well,
attitude, show up, do what you say, what you're going to do. We have, 6 core values at our company that we share with all of our people. One of those that's, again, near and near to my heart besides loyalty is being aggressively patient. So having a long-term time horizon, understanding the long-term goal and the outcome that you're looking to create, and then using OKRs to be able to build back to daily tangible tasks that you can do or actionable items that you're aggressively working on to be able to, achieve that long-term outcome.
so curious, Jake, what are the 6 values you have?
So being selfishly selfish. What I mean by that is, everybody's selfish in some regard, right? Like you have to be able to provide for yourself and your family before you can help others. What I like to do is to align interests. So at our corporation, we're always looking at what the other counterparty, whether it's our clients or our vendors, or internal employees, and trying to figure out where do they want to be over the next 5 or 10 years, or 10-year, even further into the future. And how do we align our interests with those in order to make sure that we're, on the same track? It's when people get sideways that, things
So
aren't.
what you're saying is almost like in the airplane, you put the air mask on first, make sure you can take care of yourself, and then you go ahead and help the other people around you. Is that a good way of summarizing it?
Well, not even that, I don't know that that's a good representation of it. The way that I build things is you have to win for me to win.
Understood. Okay, thank you for clarifying. That makes perfect sense.
Yeah. I mean, my dad explained exactly what you just stated there, right? Like you have to be able to take care of yourself before you can help other people. And I would completely agree with that, but I think you can do that in a way where it's not a zero-sum game.
Understood.
Um, and I don't necessarily like working with people where it's, we get to win first and then it's you, or you might get to have some after. I want to win together, right? Like how do we align incentives on things? Another one is pantheon thinking. So for many family offices, they're thinking on the next 100 years. How do we structure things in a way where it's flexible and dynamic enough that as regulation changes and technology changes and the world changes, but we can still maintain the core values, principles, and beliefs that are guiding us in that decision-making process in order to be able to, navigate that. Because as the world sits today, it's going to look very different 20, 30, 50, 100 years from now. And for next gen or the people that are continuing to work at this organization in the future, they need those principles, core values, and beliefs in order to be able to navigate that, but you don't want to make it so rigid that they can't operate in a new environment. Integrity is another big one for us. So doing what you said you were going to do long after the motion that you said it in has left. uh, Discipline goes along with that, right? So I was a bodybuilder for 10 years. Woke up every morning, did my cardio, ate 6 meals a day, didn't miss. Trained, at some points twice a day on top of the cardio to be able to, get ready for competitions. My last show was 2019 at Nationals. Didn't place very well, but I was about 230 pounds at 5% body fat. I'm
Wow.
5'11".
Wow.
So put on almost 100 pounds in those 10 years, about 10 years, 10 pounds a year of muscle. But through that process, you develop a lot of discipline. You do what you have to do when you need to do it, regardless of how you feel about it. And if you listen to any high level athlete, that's where it is. Anybody that's had extreme success, they continue to execute even when they don't feel like it. Michael Phelps talked about, he swam every day for 4 years, and there was 100 days in there where he was like, nope, he got out of bed and I don't want to do it today, did it anyway. And that's why he won all the gold medals that he won, right?
Couldn't agree
Aside
more.
from, the gifts that he has genetically.
Right.
Um, Kind of going back to the community, right? So we have, like I said, 17,000 members there. Many of those people have been with us for years. They're extremely loyal. We help people that help us,
Hmm.
right? So employees, vendors, customers, doesn't matter. We build out a lot of loyalty programs, make sure that we're taking care of people that take care of us. Um, the other two are, one's just breathe excellence. So operating an extremely high standard. I believe we've set the standard in the industry for wealth management for crypto. We've done it the right way. We're an SEC registered RIA. We have all the compliance and systems and everything to be able to navigate risk appropriately, communicating that to clients, helping them understand. And then also, as the industry continues to expand, setting the standards for tokenization of securities and other tokenized financial products. We're on the council that proposes legislation to the SEC and other regulatory bodies. But again, kind of going back to the integrity and the discipline, executing, right? Like if we make promises, we need to hold those and make sure that our clients and our vendors and everybody else that we're working with are being taken care of. And then last is just being open-minded. I think a lot of people put blinders on. You have a certain paradigm that you exist within, and I try to be open to new information all the time. I have to have discernment in order to be able to decide, where we're going and what the direction is and how we're going to allocate resources and make effective decisions. But at the same time, be open to new information and data and being able to say, "Hey, I was wrong," or be able to pivot. You have to have the humility on that to be able to step aside from your ego sometimes and pull yourself out of the situation emotionally and think logically through stuff. And so I think, as long as we're able to execute on those 6 things, I think we're going to do very, very well. And that's why there are core values at our company.
Well, I love that. Okay, thank you very much for that. Next question about leadership. You touched on this before, but what makes a great leader? What are some lessons you've learned about leadership that you'd like to share with the audience?
Again, just kind of taking the conversation back to the boot or the carrot. Um, I like to lead from the front. I'm working 14, 16-hour days. I don't want anybody at my company to feel like they're working harder than I am. I've seen a lot of leaders be bosses, right? They kind of boss you around and dictate what needs to be done while they're playing golf on the golf course and I'm not saying there's not a time for that, right? Like after you've, executed and exited or done whatever you're doing, then there may be time for that. But um, I've always looked up to and admired my managers and leaders in corporations that I felt like they were hustling just as hard as I was or harder or really kind of setting a standard or pace for an organization. Um, you want to provide people with the resources they need to be successful too. That's what I've seen a lot of people fall short in previous jobs is if you're hiring A players, they know how to execute. They have a playbook. They just need you to get out of their way and not micromanage them. And when they ask for something, or if they need help or resources, be there to meet them and provide that for them. Um, and then, kind of lastly, I, I think that if you're a good leader, um, you're meeting with people and you understand their actual situation. I care about our employees. We have candid conversations about their personal lives. Um, it's weird, over the last year, we've scaled from just 10 people to over 100 people at our organization. And I didn't hire all those people. So I don't know every single person by name. I don't know their kids. I don't know everything about them, which is hard for me because I really enjoy having those close relationships. I know everything about our C-suite and one more layer down. But at scale, it's difficult if you had 1,000 employees to know every single kid's birthday and all of that. But I'm working on it. That's something that I think cultivates because then you have empathy, right? People aren't a number. You understand their situation or why or how they thought through different things and made decisions. Sometimes there's a scarcity mindset. They might have a situation where they got a baby coming up or daughter's going to college or whatever it is, they need the extra money and then they do something that they probably shouldn't have in order to navigate that when they could have just had a conversation, said, "Hey, look, I got this coming up. I need a pay bump," or, um, you know, so we want to have an open door policy. We want people to be able to be comfortable coming to us with situations that they have in their personal life. We have unlimited vacation at our company. It's not like a 2 weeks a year and then we roll it or any of that. If you have things going on in your personal life, go handle it. I still expect you to do your job, right? So if you get your job done in 4 hours and it's fantastic and you've executed and there's nothing else I can ask from you, go play video games. Go spend time with your family. Go golf. Go do whatever you're doing. But um, the work needs to be done, and oftentimes there's a little more work than can be done in 4 hours. Maybe with AI, we'll get there.
I love
Um,
that. Yeah.
but anyway, so those are the qualities. I've worked, like I said, for a lot of other people, and tried to take the best things from each one of them and how I would want to be treated if I was an employee, and then operate in the same capacity as a leader in our organization.
Yeah, I love that. I'm very similar to you, where it's a carrot, it's not the boot that motivates me as well. And I love the fact the leadership and outwork everybody in the team. And then I had a similar situation on my side. We recently built, I told you I had a surprise for you later. I'll share it briefly with you now. Something called Market Terminal, which is like a traditional Wall Street terminal, but for everybody else, for retail investors, and has
Very
crypto
cool.
and stocks. Yeah, has an AI prediction. It's really, really, really powerful. I've always wanted to have a Bloomberg terminal type thing or
Mhm.
Icon terminal, Wall Street terminal for me and for the masses, and it just wasn't available. But thankfully, it took us a long time to get there. We got there, but as the team grew, same thing happened where people had to be hired, and I didn't know them. And I'm
Yeah.
just like you. I love the relationship component. And I
Yeah.
go deep with people, and it's inevitable, but it's needed to grow. So the good news is that the other layers, like you mentioned, hopefully they can step in. And I told them this do the same thing and treat everybody the
That should be part of your culture, right? Like if
100%.
you're the person that you're reporting to cares about you and knows about your personal life and you know about theirs. And, I'm not saying everybody has to be friends. You don't
Correct.
have to be friends. Well, this is probably another good thing for people to know. You don't have to like anybody to
Correct.
work with them,
Yeah.
right? So if you're separating emotion from business, which a lot of people have a hard time doing, um, there's a lot of cool people that I really like and I like to hang out with. I wouldn't want to work with them, right? Because I know some of their tendencies and some of their other habits. And it's just not conducive for, the scale of the business that we're trying to build. The incentives aren't aligned there again. So we remain friends. We go hang out. We'll go to the golf course or shoot some guns or do some other stuff. But they don't work here.
Yeah.
And same thing for vendors or even clients, right? Like as long as you're doing what you said you're going to do and executing, and you operate at a high level and standard, we don't necessarily have to like one another. We can still do business and everything's okay.
Yeah, we're very, okay. So we just met Jake, and I'll tell the audience as well. We haven't discussed before, but there's a lot of similarities here and parallels. So one of the things I did was write a book, and it was #1 on Amazon every day for 3 months, which
Oh,
I'm
wow.
proud of when I first published it. And there's
Congratulations,
fundamental,
dude.
thank you. There's fundamental and technical analysis. Well, my whole thing is it's not enough to beat the market. If it was, everybody owned a few islands in the Caribbean, so something's missing. Enter psychological analysis. What's the whole premise? teaches people how to make rational, not emotional decisions with their
Exactly.
money. So the fact that you're saying separate the emotions from the business, it's the same thing here. Separate the emotions from the investment stuff.
100%.
So I love what you're saying here. So, all right, final question for you today, Jake, and thank you very much. You've been very generous with your time. What is the best piece of advice you'd like to give the audience and or your 30-year-old self?
Oh man. Um, have faith. So, 5 years ago, I sat down and prayed about where I needed to go and what I needed to do and how to walk my highest path. And I'm not saying you have to be religious. Okay. So that, just believe in a higher power of some capacity. I can tell you that everybody that I've met that's extremely successful does. Um, and so, I asked what I was supposed to do, and was given something completely different than I thought possible at the time. And I've had full faith and reviewed that vision every single day. And that looks like a very likely outcome at this point, 5 years later. Um, you are what you think about, right? There's lots of books about that stuff, and it sounds woo-woo. But I would encourage people to, read Think and Grow Rich, The Richest Man in Babylon. There's a lot of books about money and psychology and how you can manipulate the world around you, just by having full belief and faith that something is going to work out in your favor and being able to look for those opportunities when they show up. If you're not looking for them, you'll miss them.
You're not going to
And
find
when you
them
see them, you have to
yet.
take action. It's
Yeah.
not like they just magically, they might appear, but you have to take action when they show up. Like I said, watching my dad go through the things that he did and just not take the swings, um, just give me a different paradigm around my life. And I think that's what's allowed me to be able to step into, the path that I'm on, and continue to create as much value as I can for other people. And I think that's a big piece too. When I was growing up, my dad was like, "You need to go to college." Full boomer. You need to go to college. You need to get a good paying job. That whole thing. It really just comes down to how much value you can create in society, and how irreplaceable you are in providing that value. That will determine your compensation. So if you are doing everything at a high level, going the extra mile, and then you figure out, what your unique gifts are, and you're able to drill down on those, sky's the limit. You can literally create whatever life or reality you want, if you have full faith that you can get there and you continue to take action day to day to be able to execute on it.
Jake, I absolutely love it. Thank you so much for taking the time. Congrats on your success, and hopefully we'll have you on again.
Yeah, sounds great. We'd love to be back. Thank you.